Hello guys, welcome to the Trading Parrot. Yesterday we broke back above 100k. There is some pending business though. Let's call it the retest. So in this video we're gonna look at what is supposed to be a healthy retest, what levels we need to defend on the 4-hour daily closing basis, so we can indeed have an explosive continuation for the rest of December, mimicking the steps that we did precisely 4 years ago. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And let's get into the content. So yesterday people were saying, why are you calling your video make or break week? And I think it's been the case more than a week that we are trying to protect the continuation in December of the price action. And that is based on past performance. We are looking for patterns that look suspiciously close to what we did 4 years ago. Call it a fractal, and once the inflation rate was confirmed, it seems to be the case that that was holding the price at that point in time. Interestingly, the same events, inflation, interest rates, adjustments, the timing of those events were very similar 4 years ago as well, adding up to the case of why are we moving so similarly with the price action as well. So let's start with that. Indeed, we have the 1, 2, 3, 4, 5 movement this year after the impulsive move from the pivots early in October, just like in here. Then we get the November bouncing off the CPR levels on both sides as well, hitting the third resistance, then having a shake off by the end of November that reaches the point 3 in the count. Then we get a high in December, which we could say it was the 5th of December with the doji candle, and in here it was on the 30th of November and 1st of December. After that, in 2020, we started coming back down to do the third test of the ascending trend line, which we did on the 11th of December, and in here we did it on the 10th of December. After hitting that, we bounced aggressively from the trend line in 2024 and also in 2020, although this bounce yesterday was much more significant than the one we have here. On the 12th of December of 2020, we only reached 18.7 when the resistance was located at 20k. Then we spent 6 more days until we managed to break above 20k. In here, we went straight for 101k, which was the resistance coming from the highest close daily so far in history of Bitcoin. And here we are, right below resistance, 101k. We're gonna come back to the daily time frame just in a second in this chart in here, where it also confirms that we are below resistance on the daily. Very important to be aware of that if you are in a trade already or considering to enter a trade as well. On the 4-hour, we can see that after we have this local breakout, I call it local because global will have been to break above 71. That will be a global breakout. In this case, we're just aiming to reach RSI 71 or 72 like I put it in here yesterday. Let's show the reverse RSI to see where in the price is that. The target of 104k will be just to hit the global resistance, the green line there. If we manage to get there, that's great, but indeed we need a global breakout. We need to go beyond 104k, and that is consistent with putting a new high. So once again, the 4-hour RSI is giving us very good insights. For example, on the 10th of December, it gave us precisely the best point to buy on support. That was at RSI 36, and in the price action you can see that buying that support was definitely the best thing to do around there. We talk about a potential comeback for a retest. This is just an exaggerated last line in the sand for a retest, but the retest can be anywhere on the 4-hour. So far it seems to be happening at 58. It's too early to say really on the 4-hour if that is going to become the actual retest or if we're gonna go slightly lower to 50 or even beyond. But you can see that the support yesterday we left it at 50. That is because I was considering a retest there, but since the RSI has already moved to the right hand side, then we have to look for a retest lower, potentially at 46. So we have to drop this, and as a consequence my support is gonna move to the next line, matching now the 98.2. So a full retest without becoming a fake out, in other words, without breaking below the white line and closing below it, would mean the price going to 98.2. Remember, that is on a closing basis. Within the intra-candle 4 hour, it's still allowed to go slightly beyond and still not break as long as it closes above 98.2. And why is it so important to talk about a retest there, a last line in the sand? It is very important to identify it, because if you enter, for example, at support at 36 and you're still in the trade with the hope to reach the top of the range, and this comes for a retest and it closes and bounces off the support, then you can continue breathing and thinking that you might get away with hitting the top of the range and taking still profits there. Now, if we never go there and touch it and you're still in the trade, there's even less reasons to close the trade. Now, notice on the 4 hour what we are doing in here, which is a pretty interesting pattern, but you won't be able to see it unless I hide everything because it's becoming too busy. I'll hold that thought for just 1 second. Let's finish the RSI, reverse RSI analysis. We have the support now at 37, so we need to move the red 1 point up as well. Remember, we moved the 50 to 46, the 30 to 31, and maybe we can move down the green just to 71. And now let's mention all those levels. So this becomes 103.6, support at 98.2 more or less, and a full reset of the 4 hour. If it happened again, that will be at 37, and I think I put it wrong. It's more or less 37, yeah. So a full reset to the global support, then we reach 95.6. So now let's go with the pattern I just saw while I'm recording the video. And the pattern is precisely this. Let me remove these drawings. I think we might be putting some sort of inverse head and shoulders in here. That will be lovely to see. But if not, you can also argue that this is a cup and handle. But I don't see much difference between the cup and handle, because most of the times when you have a cup and handle, you have the other handle and then you get the inverse head and shoulders. And whenever there is a head and shoulders, there is an internal cup and handle. So we can say that the cup and handle is less than the head and shoulders, maybe, because this one, the head and shoulders, has more requirements to fulfill. Let me know your thoughts about that. That is just the way I perceive it. It's not written in any book, but maybe one day it will be. So let's say that this becomes some sort of inverse head and shoulder, of cup and handle, or whatever you prefer to call it, something like this. It really doesn't matter as long as it matches more or less that expectation and you got a neck and you got a high, then you can have a target. So in this case, I'm gonna use the wicks. So the price reached somewhere around 94.1, and I'm gonna project this in here, and that could give us, if it gets fully formed, 108.2. Now, why is it relevant whether we call it a cup and handle or a head and shoulders? It is relevant because if this is a cup and handle with the handle placed on the left hand side, we could just go on and break out immediately, right? We don't need to fully form the right hand shoulder. We don't need to wait for that. This can just from here shoot up, break above the neck with a candle 4 hour close above 101, and then we can start talking about that target of 108. So the head and shoulders is there in case the price action comes back to 99 and it does the retest that we talked about yesterday in this live stream that we did 20 hours ago. And if that's the case and we feel the right hand shoulder, then we need to wait for 101 once again, candle close and target 108. Notice as well that halfway through into the target of 108, you got the global resistance of the RSI. So do not ignore the 103.6 when you're halfway through that, because it might reach just partially the full target. So if I started with a stop loss somewhere in here and I was already in profit there and I started seeing some sort of rejection, I will consider potentially to think about a break even, stop loss place somewhere in here in case it failed, or just taking that profit and run and potentially missing the full target. You have to find your own trade-off according to your risk and your own research, of course. Let's go into the daily, because this brings completely a different perspective. We need to look again at the RSI in here and do the analysis. We lost the RSI support from August. We talk about that for 2 days. We say we are pending from a thread. There is a make or break. And this, guys, this having come back above the support from August is what I mean by a make or break, okay? It's not clickbait. It is what it is. We managed to regain daily support, 4-hour support, all time frames indeed on board. If you're not aware, it's because you are living under a rock and you just think that everything is clickbait. Some people were saying that altcoin season end is a clickbait video, and the whole video talks about the altcoin season index coming back below 75, offering an honest discussion on whether that really means losing the altcoin season and what opportunities do we have and what are my thoughts on whether the altcoin season is actually ended. And you still get people saying that is just clickbait. They don't even watch the video. Anyways, moving on, I'm gonna stop focusing on the people with less than 10 IQ and I'll try to focus mostly on all of you guys that really deserve it. So we are back above the support on the daily, but here it is this yellow line, which is a resistance. Definitely we want to break above resistance on the daily, right? That is currently located more or less between 65 to 66 RSI. The white line that we just regained support is at 60 and the bottom is at roughly 30. The top of the range is 85. But as I said yesterday, I doubt that we're gonna get to 85. That doesn't mean that we cannot reach 140, 160, even 180. We can get away with getting to those prices without touching this line, okay? If you don't understand how can we do that, that's because you haven't studied enough RSI and you just think that it's an oscillator that moves between 0 and 100 and it tells you when it's overbought and oversold. If that's your case, I'm not insulting you, I'm calling you to go to my 3 tutorials and watch them so you can get a little bit deeper understanding on what the RSI is really offering you. So numbers 60, 65, 30 and 86. We just need to change the 65 to 66 and now we can observe very clearly here what are the levels that we need to defend on the daily and what are the levels that we need to break above to start talking about higher targets on the daily as well. So even though we have this trend line that, as I mentioned in multiple videos, we did cheat because it is cheating to grab a trend line and start moving it all over the place to match new candles and stuff like that. But I do it all the time. I make sure that you're aware whenever I do that. So our daily support is 99.5k today. Our resistance on the daily is 102.7 and bottom of the range has moved up to 75 and the top, that level that I say on the RSI is very difficult that we reach it, is at 134k. That is a moving target. That's why from reaching it in very short time, meeting with 134 is low likely, but we might do some movements up and down, which is a lot more likely than making it possible still not reaching RSI 86. So I'll tell you something very controversial. It's great that we recover the support. It will be even more awesome if we break out from the yellow line here of resistance. But looking at the past performance in 2020, you can see that we also had a channel going up that broke, that didn't regain entering into the channel ascending. Instead, it broke below, it did a small journey down into 12th of December and then started recovering and putting a new high. That is what we did in 2020 to 2021. So if we did something like that, it will look like a rejection from the yellow trend line, coming in here, then breaking out of this and putting a channel to the upside going in this direction. So that is just past performance, which doesn't necessarily need to play out in the same way because we are already at 12th of December and we are not here like we were in 2020. We are still above it, we reclaim it, so it seems to be doing already something different. But just so you know, that is what we did, which is more or less come back down here and then start claiming from a lower ladder instead of breaking out from here and going up from there. So just keep an eye for that. And something I cannot forget to mention is that the Big Well Explorer is doing a breakdown below this trend line. It's early today, so all of these outflows that are currently suddenly spiking at 14K, something like that, and since there hasn't been any inflows registered still today, remember that I access this data from CryptoQuant via TradingView, which updates only once a day. I still don't have access to the live data from them. And even if I had, this indicator that I built, the Big Well Explorer, is coded in PineScript, which wouldn't work with CryptoQuant. Anyways, I wouldn't be able to see this real time unless I transcribe my indicator into their own language, which I have no clue if I ever gonna learn it and have the time to do so. But I'm happy with seeing it once a day. And all I know is that this might change during the day. And maybe the next reading is gonna correct this breakdown. A breakdown is something really cool because it means that the stochastic that we are calculating based on these two readings, the outflows and the inflows coming from large holders, it's indicating that withdrawals, it's currently outpacing deposits at a faster pace. We spent quite a bunch of days here with a ratio above 1, and now we are below 1 at 0.84 and breaking down both the trend line and the moving average. So if by tomorrow this is settled in here, that is good news. Let's compare it with what we were doing in December. So around this date, we were at a ratio of 1 and we came back to this trend line and we continue climbing, but the price still continued until there was a huge spike in distribution at 73.5 that resulted in 8 months of sideways. So not looking very similar unless we close above the trend line just like we did there. So in a nutshell, I find this a good movement, but I'm a little bit worried of what I'm seeing on the alerts on Telegram from CryptoQuant, because yesterday first there were 5,000 almost exchange inflows, deposits, then there was 16,000 inflows additional. So that should be over 20,000, and then you get almost 5,000 inflows today. That should make roughly 25,000 Bitcoin and over 2 billion possibly in cash coming into exchanges, primarily going to Coinbase Prime, you can see in here. So if many of them are whales, I will assume so, and if they are not internal transfers, which sometimes they claim publicly, do not worry, we are just moving this from this wallet and we are just doing maintenance or whatever. If that's the case, we shouldn't worry, but if indeed is a genuine distribution smell, then by tomorrow we should be seeing something on Big Well Explorer. We are back into extreme greed. Yesterday we were at 74, back to 83. We have this trend line on the weekly RSI, and you can see how we continue to respect our support 1, 2, 3 weeks in a row that we tested. The orange line is this white line ascending, and the red one is this yellow one there as well. In the last 24 hours, the liquidations have cooled down massively. Remember, we have almost 1.5 billion, and in the last 24 hours, we barely have a quarter billion, with 100 in longs and slightly more shorts. You can see the largest one that happened overnight were mostly shorts getting liquidated above 101K on different exchanges. And even though we liquidated them in here, which is yellow, you can see that there is plenty more of pain to distribute among all those shorts at the top of the chart. That red ends at 103K. Below the price is the people that are currently longing this move. This is short-term liquidity pools. Below the price to go into red, we need to go 11.8K, whereas to go up and take it all, indeed, we just need to move 2K more. So I'm sure that there are many of these people shorting in there, getting stressed, some of them giving up, attracting the price up, and many of them even thinking, I'm gonna add more at 105K, which indeed, if it becomes red here, that's gonna make even more feasible our chances to hit 108 and not just 103.7, which is the initial target in confluence with that liquidity there. Looking at the long-term liquidity, there's an incremental amount of shorts that are placing the stop losses in between the price and the red, increasing how easy it could get to get into the red. It's like if in here in the red there was a huge tank of gasoline, and then people think, you know what, I'm gonna put a short in here, and then in between the gasoline enabling in the price to drop some wood and maybe some dry grass. And of course, that is making it more attractive to go up. And now with this move down, they got tempted to do that. And all they are doing is completing my inverse head and shoulders. Remember, the head and shoulders needs to close above the neck, okay? Be disciplined and make sure you take notes of the things that I'm saying. If you have questions, drop them down in the comments. Don't be a troll. Don't brag your stupidity. It doesn't make you look good at all. All right, let's look at the ask and bid liquidity, which is also important. Of course, it's been great alpha to focus on longs when we see increased amount of bid, and when there is increased amount of ask, we start stepping back with any longs and thinking short. In the past 2 times, very clean alpha in here. In every leg of the bottom information, this W, there was spikes of bid, and on this resistance next to this order block that we mentioned yesterday from Lux Algo indicators at 101, we indeed had an increased amount of ask. Notice as well how they are stepping back. The shorts in here, they were really cocky, shorting and distributing with a huge wall. They did it back again in here, but you can see the trend line, how they are diminishing their power, and at the moment they're reaching 11 minus, in here 0.2 and in here 0.23. And at the same time, if we look closer, you can see that the line is showing that they are getting closer and closer to flip into the light blue. You can see previous areas where we flip into the light blue. There can be some reversal like in here, or sometimes an impulsive move depending on how much liquidation levels they are right next to the price. I have to mention though that there is 280k delta putting the longs at the moment at risk, and if that play out, hopefully that 280k of delta is just enough to form the right hand shoulder and not too much to break below 99.2 or 98.2, so it completely destroys the pattern. Let's have a look at the order book. You can see 100k.2 has some selling power with 32 million. 34 million, and above the price at 104 and 105 there is a combined of almost 90 million. That is pretty substantial, followed by 110k with 42 million. Support comes in at 95 with a humble 25 million and 26 million. Remember that there's been multiple times when there is not support, and then suddenly from black of just 6 million it spikes into 117 million, wanting to buy that 95. So don't assume no support means no interest necessarily. Neither when there is support, it means that they're going to execute it. In here, they wanted to sell with 100 million and suddenly they reduce it to just 2 millions right before the price crosses through it. So there's a lot of manipulation in here. So you might be wondering, then why you even bother looking at the order book? And I think the keyword here is experience and also the way you read all this information, starting with not being silly and assuming the obvious things, but trying to read between lines, contrast this data with other sources of information to try to spot the lie, I think is the key. Rather than thinking of it as a if X then Y, if Y then X, think about it as, alright, that demand is there. Now let's look for other sources to confirm that they really want it, or if they're just spoofing. Today on the delta, we cannot do much again. We're just in the middle there. We are not in any extreme, but if that's the case, I will let you know. Liquidations on top, 102 from the past 30 days, or 93 and 89 below the price. A little bit too far in my opinion, considering that we are already almost next to 102. So hopefully we just go and grab the 99 and we form the full head and shoulders, or we just go ahead and straight away break out above 102. Those are my preferred scenarios. Let's look at the fair value gaps. We have a fair value gap at 101.9. Let's call it 102. That is the current incentive to pinch all these 3 levels that haven't managed to take it and overlapping with this liquidity there. Below the price for the head and shoulders incentive, we have from 100 all the way to 97.7. So I am hoping that if we do go for all the fair value gaps to 97.7 in the 4-hour time frame, we bounce off and close above 98.7. Just looking here at the fair value gaps. Okay, we need to overlap this analysis with the other analysis and form ourselves some sort of average weighted by what we care the most. So that 98.6 confirming a close above it and then starting to come back up could be an early signal of the head and shoulders. If you want to wait for the full breakout and be on the safer side, 101.2, but whichever option you pick, the early or the later one, do not trade without a stop loss or without any sort of plan, risk management and stuff like that, unless you just want to gamble your whole account and one day lose it all. Nasdaq is rallying a little bit in here with a green candle, but against the hive sell signal. So it's basically ignoring all the bearish divergences coming from different indicators. You can see in past performance, this one play out, second didn't, third did, fourth did, fifth did. So in the past 5 signals, one failed. So let's see if the Nasdaq one in here is gonna do a retracement of 9% based on the past week close, yeah, or if it's gonna act like this one from 14 June 2021 that completely ignore all the bearish divergences. Dollar and gold are still doing bearish things for Bitcoin, so be on the lookout for that as well. We know already that Bitcoin in this cycle has managed to rally pretty nicely against the dollar and against the gold without necessarily having major corrections. Yet, what I doubt massively is that Bitcoin can rally for too long with global liquidity draining, because really Bitcoin is a hoover of liquidity, and if you cut all that injection of liquidity, it will just start draining. You can see that the dollar is coming back for a retest on the weekly in here and pushing back up, and we really need the dollar to put another low, break below this range and start collapsing if we want dollar to influence in a positive way a move up on Bitcoin. Gold broke down and is putting potentially a lower high in here, but a higher low. So hopefully the next move for gold on the RSI is a move like this and not a double bottom information and then start rallying from here, which is again not nice at all for Bitcoin. The thing that is really great, and I'm gonna close the video with this, is if you look at all the history of Bitcoin on a logarithmic chart, you can see that the monthly RSI reached first 97.7, on the next cycle 94.5, 87, and if we put this trend line in here, the top is at 78. That is the top of the RSI, not the top of the price again, but we are for the first time, guys, in this cycle with an RSI above 70. So that belongs to any of these red areas, green areas in here, and you can see how long it lasts. In this case, it lasts 1 year from the month that we broke above 70. I'm gonna ignore the first week there. I'm just gonna count the big chunk in here. It lasted 337 days, almost a year, and the past cycle it lasted only 180 days. So I did the following thing. I took that 396 days initially, then the 337 and 181 in the last cycle. That is how long we stay above the RSI 70 on the monthly, and in theory we should be ending the RSI above 70 monthly in 90 days. And since that starts from this month, because we closed November above 70, we have until the 1st of February to remain above 70. Notice that once you cross below 70, you need a candle red. For example, in here, this candle put us back below 70 in 2017, indeed 2018. This candle put us back down when we were already at 6.7K. In 2021, May candle put us back below 70 at 28K. So it's worth mentioning that if the linear regression, which is what I used to get that projection of 90 days left above 70, then that means that we should be exiting halfway through those 90 days, which is pretty annoying. That means 1 month and a half from the beginning of December. So pretty much 15th of January. That is just crazy. I just found it interesting to use linear regression to forecast the length of being there and then use it for something useful. Notice that I didn't do the linear regression by my own hands. I asked ChatGPT to use those 3 numbers and give me the 4th number using linear regression. I also use quadratic and all the things from mathematics that I remember from uni, but I didn't get anything that made sense. Let me know in the comments if you are a mathematician or someone that knows about these things and what are your thoughts. Guys, if you want to trade on an exchange that offers one of the largest array of coins on spot and on future perpetuals so you can get access to leverage, then consider using Bybit. If you open a new account on Bybit using my link in the description, you can claim up to 30,000 in rewards and get the lowest fees to trade as well. If you don't want to do KYC though, I've got two new exchanges. One is Bluffing and the other one is called 2bit. Both of them are at the top of my description. There is just 2 days of this exclusive campaign that is giving rewards not just on trading volume but also on the size of the deposits that you're doing. Make sure that you take advantage, but before you deposit, I will say test both exchanges, particularly if you suspect that you live in an area that might require to use VPN. I'm pretty sure that one of these two exchanges, 2bit or Bluffing, is gonna work where you live, and I mean by that not needing KYC, not needing VPN, being able to open as many accounts as you need to split your funds, reduce risks, and separate your different trading strategies as well, which is very well welcome as well. Thanks so much for watching. I'll see you in the next one. Bye bye.